The closed-end fund market looks very attractive from our standpoint for both fixed income and equities. So when we look at the closed-end fund marketplace at this time, we're seeing very large discounts compared to historical averages. Last year, we saw discounts similar at this time, and we had kind of expected a bounce since that was after a year where, the Fed scared everyone with the whole, Fed taper tantrum, and that really sent a lot of closed-end fund fixed income investors to the exit. As early as 2-3 years ago, we were seeing a lot of premiums in our space, and right now the average fund, as I said, was probably around 7% discount for both equity and bond funds. What we're seeing now is about 90% of the market's trading at a discount, and 1/3 of it's trading at discounts greater than 10%. We've been of the opinion that interest rates are going to stay low for a considerable period of time, and that's one of the reasons that we've still invested in fixed income over the last couple of years when a lot of people are calling for higher rates. Do we see higher rates coming? They could happen, but we don't really see it, especially with inflation numbers this low. Well, the interesting sectors that we're looking at remain healthcare, and REITs are still pretty attractive. REITs are interesting mainly because of the low interest rates. If interest rates go up, there might be a whole different ballgame there, but in the meantime, they look very attractive. We are looking at high yield and especially energy. The high yield funds, though, they usually have a high exposure to the energy space. They got hit pretty hard, so now they're looking pretty attractive. The global economic weakness, it does affect the closed-end fund market some, but for the most part it's going to be centered more around high-yield funds or regional funds that really focus on those regions. The rest of the closed-end fund space doesn't have as much exposure to those regions. The trend we're looking at is probably shareholder activism in the closed-end fund space. Last year discounts were very wide, and we were expecting discounts to narrow into this year, and they really didn't. They actually widened out this year. So we kind of look at that when something trades at a sustained discount for a long period of time. Oftentimes the activists will come in and try to take advantage of these long-term discounts to try to affect some value for the shareholder.
For more information and data on closed-end funds, visit our sponsor, cefconnect.com, the authority on closed-end funds. This is Closed-End Fund News. Thanks for watching.